Hi there, Reynaldo here from Atlantic Super Treasury Education. We are going to have a look at the marketplace, mainly the Dow Jones Industrials 30. I know the S&P 500 will be a better thermometer, better tool of analyzing, but I'll just use the Dow Jones for now since it has the same correlation with the S&P anyway. All right, looking at the bigger time frame, the broader market analysis point of view of the Dow after the breakout pretty much of that massive drop since the financial crisis, change a new trend. Now we have a new higher high, higher low. With a new higher high, we're back to where we are at as of last year in 2011, about April. So when I stated that this one finally got exhausted, there's going to be a correction. Now the same thing. So far, yes, we have another 2 more weeks in order for this candle to finish, but nevertheless, looking at it, we see here that buyers pretty much now got exhausted. Sellers are currently in control, and as a price pattern in candlesticks, what we call bearish engulfing, where the body is engulfing the previous body, just means psychologically that the sellers are now, or the bears are currently in control. So there's more supply than demand after 1, 2, 3, 4, 5, 6 months of the bulls taking over. It's currently exhausted and it's trying to correct itself. So we have a area of supply between 13,300 and that one about the 13,290. So if you've been watching my videos, past emails or newsletters, I wanted to get the high of this candle, which is approximately about May of 2008, to be broken, the 13,136. At one point in time, there was just sellers were resisting this price about 13,130, and then last month it did break to create a new high. Now we have a new set of high about the 13,300 mark, which is also the high of this bar, the low of that, cutting across. So mainly about this midsection. So if this is just a stabilization, if it doesn't want to correct itself, then it will continue to go through the 14,000. So it's not much, right, in terms of the Dow. That's only a 700 point gain. However, since the market doesn't go in a straight line, the question is where to from here. That's easy to find. So approximately, if it chooses to retrace to the downside, then we're back to the good level of demand around here, also around this point in time, approximately about the 12,200 mark. So another 700 points to the downside. So on average, from here to here is about a 30% drop. Okay, so that's pretty much my take on it, to create a higher low and then a new higher high. So in the next few months, it may choose to come back down before it may continue to go up. However, if it's really strong, the market will be strong regardless of whatever macro fundamentals that we may have, then it may continue to go further. Alright, so this is pretty much what I can see, and if you can, if we're going to go through a small time frame or medium time frame like the weekly chart, so you can see here very clearly after pretty much an exhaustion, so in the level of supply, there was a really good area of selling, came back down earlier this week all the way down to 12,700, and then in the past few days it did come back up. So they're testing this price at a level of demand at the moment 12,900, where 13,000 was also a really good strong demand level pretty much for the past few weeks that you can see through there. But because of such a drop and also an increase, so if you can see here, sorry about that, let me delete that for a second, create a better picture. So these trend line as of October of 2011 got broken, so it has some room in order for this to head back, to go up and down if we push this to pretty much in the future. Now we have a new lower low. The low is also lower compared to that last previous low. Lower high, lower low, lower high, lower low. So I reckon the bears are gonna push the price all the way down to 12,200 in the next few months. That's if sellers are definitely, we're seeing here the sellers are really pretty strong. But other than that, if not, then this will continue to go up. Then our analysis will pretty much change. So, however, these are definitely some possibilities that we may incur or basically have in terms of the analysis point of view. So by July, all the way down to 12,200, but if not, then it will continue. This is just a minor correction, higher high, higher low, then it will go through a new higher high. But looking at the daily chart, after 1, 2, 3, 4, 5 days, business days that the bears were in control, last 2 days were just pretty much a correction, currently stabilizing itself. So the odds and probability that if the bears will continue to drop, then by next week back to 12,700 once again, probably even further, all the way down 12,600. So the major target point, but the 12,200 will be the first real level of retracement. Alright guys, this is it for me. I hope you enjoy that. So at least that, there's something there for you guys to have a look. Have a great weekend. Till next time, happy trading and practice.